If you're middle class right now, there's a pressure nobody really names. On paper, you're doing fine. You work, you pay bills, you're responsible. But there's this quiet panic underneath it all. If one big thing goes wrong, I'm not as stable as I look. And that's exactly when crypto starts to feel less like an investment and more like a lifeline. Because crypto offers what the middle class is starving for, a shortcut, a way to catch up without sacrificing your entire life to overtime and burnout. But here's the trap. Crypto doesn't just risk your money. It can train you into financial behavior that keeps you stuck, even if you get a win. And by the end of this video, I'll show you the one shift that flips crypto from a trap into a tool.
Let me be clear, I'm not here to dunk on crypto. Blockchain is real. Some projects will last. Some people have made life-changing money. That's not the debate. The real question is psychological. Why does crypto, more than almost any other asset, turn otherwise responsible people into stressed, impulsive decision-makers? Because long-term wealth usually isn't destroyed by lack of intelligence. It's destroyed by time pressure and emotional spending. And crypto is basically engineered to press on both. Traditional wealth building is slow and boring. Consistent investing, diversification, compounding over time. It's almost invisible. Crypto feels like a live scoreboard 24/7, and it turns your finances into a game. And here's a key line. Feeling like you're doing something with your money is not the same as building wealth. Sometimes doing more is just anxiety wearing a productivity costume. So why does crypto feel like freedom, but so often produces the opposite? Tighter money, more stress, less progress. Layer 1 is what I call the miracle mindset. Middle-class life can feel like a treadmill that speeds up every year. Rent, insurance, groceries, up. Your raise, maybe. So you start looking for a miracle. Not because you're lazy, because you're tired. Crypto floods you with miracle stories. I turned $2,000 into $200,000. I got in early, passive income, retired at 29. And when you're stressed, your brain doesn't hear that's rare. It hears there's hope. But hope gets dangerous when it makes you skip the foundation, because the middle class doesn't build wealth through miracles. The middle class builds wealth through resilience, having margin, having a buffer, being able to survive volatility without being forced to sell at the worst time. And crypto volatility isn't a side detail, it's the whole thing. If you invest money you might need in the next year or two, a normal life event can turn into a financial crisis. Job change, medical bill, car repair, move, breakup. It's not just did the coin go up, it's did life happen while the coin went down. Layer 2, identity investing. Crypto often becomes more than an asset. It becomes a story. You're early, you're awake, you get it, you're part of the future. And that identity feels amazing when you feel behind. But it comes with a cost. It becomes emotionally difficult to reduce risk. Selling feels like betrayal. Boring investing starts to feel like losing. And middle-class finances usually can't afford one big, concentrated mistake. Layer 3, the attention tax. Crypto doesn't just take money, it takes your attention, your sleep, your mood. If I just check the price real quick, and suddenly 45 minutes are gone. You're not just watching charts, you're training your nervous system to live in urgency. And that's how people burn out without even working more. They're mentally working all the time. And the biggest cost is what people don't calculate. You can lose your timeline. Years spent chasing coins, jumping narratives, short-term trading taxes, fees, emotional whiplash, are years you're not building the real middle-class wealth engine. Skills, career growth, steady saving rate, emergency fund, tax-advantaged investing, health, relationships. Then comes the part that really traps people, the almost win. It goes up, you feel smart, you start planning, then it drops. You don't sell because that makes it real. It bounces, you feel relief. You sell near break even. And what did you learn?
Not how to invest, you learned emotional survival, a nervous habit. Even worse, sometimes people do hit a win, then lifestyle expands, new car, nicer place, spending because finally I can breathe. Then taxes show up, then the market turns, and suddenly they're right back where they started, except with higher fixed costs and more fear. That's how a win can still keep you poor. Not mathematically poor, behaviorally poor. So what's the solution? Never touch crypto? No. It's one decision, changing what crypto is allowed to be in your life.
If you're middle class, you cannot afford to treat investing like a rescue mission. Rescue missions create urgency. Urgency creates bad decisions. The biggest difference between people who build wealth and people who stay stuck isn't IQ or even income. It's whether they build a plan that works without adrenaline. Picture yourself 5 years from now. Random Tuesday. Nothing dramatic. You're not checking charts first thing. Your phone isn't a slot machine. You're not trying to make a move before work. Bills are covered. You're investing consistently. You've got a buffer for surprises. Your future is moving forward. And if you still hold crypto, it's not because you need it. It's because you chose it. Here's the shift that changes everything. Crypto becomes a trap when it's your plan. Crypto becomes a tool when it's a slice of your plan. That's the flip. Roll clarity. If you want long-term wealth without sacrificing your mental health, you need a system that still works when you're tired, busy, or emotional. Think in 2 layers. Layer 1, the sleep at night layer. This is the part that reduces stress and prevents forced decisions. It looks like a real cash buffer so normal problems don't become emergencies. A plan for high-interest debt because that interest compounds against you. Steady, diversified long-term investing you don't have to babysit. Using tax-advantaged accounts if you have access because taxes are a huge leak. None of this is exciting. That's why it works. It builds freedom without drama. Layer 2, the upside layer. This is where crypto can live, with rules. Rule 1. Treat crypto like a pre-decided speculation budget. Money you can afford to be wrong with without it changing your rent, your relationships, or your sleep. Because if you emotionally need it to win, you're not investing, you're negotiating with fear. Rule 2. Match the asset to your time horizon. If you don't have the runway to handle volatility, you don't have the asset for volatility. Separate money for purpose so you're not using long-term bets as a short-term safety net. And quick note on passive income in crypto. Be gently skeptical. Yield isn't magic. Yield usually means risk. Sometimes it's smart contract risk, platform risk, liquidity risk, or just the token dropping more than the yield pays. If it requires constant monitoring, it's not passive, it's anxiety with extra steps. One more grounded truth. For most middle-class people, the highest return asset is often earning power, not in a hustle culture way, but in a life design way. A skill upgrade, a better role, a stronger career path increases what you can invest every month regardless of market mood. And finally, protect your margin. Crypto is a trap, not because it's evil, but because it offers the middle class exactly what the middle class is desperate for, a way out that doesn't require more time. But the hidden cost can be your attention, your sleep, your patience, and your ability to commit to slow progress. If you want long-term wealth and a life you actually enjoy, the goal isn't to find the next 10x, it's to build a system where you don't need one. And when you reach that point, crypto stops feeling like a lifeline. It becomes what it was always supposed to be, an option, not a rescue.